All right. Okay. So good evening, everyone. Thank you again, Paris and FSMOne team for inviting me for this webinar. So I think before I start, let me put up some disclaimer. Please note that the materials and content used in this webinar is only for educational purpose and not as an investment advice. Should you need investment advice, please reach out to your licensed financial advisor. So just a little bit about, Value Partners. So Value Partners is one of Asia's most established asset managers with AUM of about 13.1 billion across different asset classes from equities, fixed income, alternatives, multi-asset, as well as quantitative investment solution, which include the ETF product as well. At the same time, our investment principles are centered around the value investing, and our company expertise is towards Greater China as well as Asia ex Japan. So Value Partners has been established since 1993, and it is listed on the Hong Kong Stock Exchange since 2007, with an office in global office in Shanghai, Shenzhen, KL, Singapore, London, and a rep office in Beijing to provide localized research as well as client servicing. So please follow our Facebook account, Value Partners Malaysia, or Twitter account, Value Partners My, to know more about any investment insight from us. So I think before I touch about our ETF, allow me to briefly talk about what is an ETF. So an ETF is basically a basket of securities wrapped as a single financial product that can be bought and sold on the stock exchange. So from this definition, you can see that ETF is basically a hybrid between a unit trust as well as an individual stocks, where it actually brings the best of both world of shares and unit trust into a financial product called an ETF. So how does ETF work? So basically, ETF normally try to track the performance of an index by replicating the index based on the index composition or its risk characteristic. And then this ETF is traded on the stock exchange for investors to buy or sell. So that's simply how what an ETF is. So what are the key advantage of ETF? So the first of all, I think one of the key advantage is basically ETF is transparent. You can see that there's a lot of transparency when it comes to an ETF, because what you see is basically what you get. So normally you can know the full list of the constituent or the performance versus the benchmark, as well as the cost of the ETF on a frequent basis. And this information you can either get it from the ETF issuer website or even from Bursa as well. At the same time, ETF is also a source of liquidity. So being the open-ended structure of ETF is an open-ended fund. That means the unit outstanding actually can be increased or decreased depending on the demand from the investors. So because of this, there's an ample liquidity for an ETF. So I know that's probably some investors might look at the on-screen liquidity, which is basically what you see on Bursa's order book. But actually, that's only a fraction of the total liquidity that is available for an ETF. At the same time, ETF is also, can be used for diversification, because whenever you buy into an ETF, you are basically buying into a basket of securities, not just one stock, but a multiple stock as well. So it offers immediate exposure to a basket or group of securities for diversification through just a single trade. So you just buy one ETF, then you already get all the diversification benefit into it. At the same time, ETF is cost effective because for a passively managed ETF, there's normally lower management fee versus a mutual fund. At the same time, last but not least, I think ETF is also flexible and accessible because it can be traded throughout the day during the market hours. And probably just to elaborate more on the diversification, ETF is a one-stop diversified exposure. So I think we know there's a lot of literature or academic study that shows that asset allocation plays a dominant role in portfolio construction. So if we look at the chart there, the study actually shown that between 85 to 95% of the variation of return in your portfolio is actually determined by the asset allocation. Only 5% are coming from the security selection or even the market timing. So this clearly shows that it's very important for you to get an exposure for a market. and then the security selection can be used to further enhance your alpha. At the same time, like I mentioned, as ETF comprise of a basket of securities, so the non-systematic risk or company-specific risks are virtually eliminated from investors' portfolio. So by having a portfolio of more than more than just one stock, you actually achieve diversification with a single product. And at the same time, ETF also provide an ease of access to a foreign investment. So we know that in Bursa already we have a few of ETF that is traded on Bursa, but the underlying asset is basically a foreign asset, be it investing in the US market or China market. So it provides investors with immediate and hassle-free process for foreign exposure. So you don't really need to open up a foreign currency account or even a foreign brokerage account. You can just do it with your local brokers. So that's basically what an ETF is. And then here I would just like to touch a bit on the history of ETF. So the history of ETF actually goes as far back as 1993, when the first ETF, the S&P 500 Plus ETF, was launched. Basically, this ETF is tracking the S&P 500 performance, and it is still the oldest and, if I'm not mistaken, the largest ETF there is in the market. And even for the first ETF, it actually took a while for them to find its footing and gain traction from investors. And I think it wasn't until 2002 that ETF expand beyond the traditional equity asset classes to have the first bond ETF. And then since then, we are seeing more innovation and more issuance of new ETF. The first commodity ETF, the SPDR Gold, was introduced in 2004. And then leading up to the global financial crisis, we see more exotic ETF, like the first leverage and inverse ETF were introduced in 2006. And even until now, this innovation continued. And if you probably noticed, earlier this year, we already saw the news of the first cryptocurrency ETF being launched in Canada. So right now, the AUM for ETF globally stood at about 8.9 trillion US dollars, and it is continually growing. So now, coming back to Malaysia, we look at the current offering in the market. We have about 19 ETF listed on Bursa, and this range in terms of asset classes ranging from bond, equity, and commodity. And in terms of the geographic focus, it's either Malaysia, regional, or even a single country focus. So right now, we have about 6 Sharia compliant ETFs, including ours, which is the VP Sharia China AShares 100 ETF. And at the same time, we have about 5 China focused ETF. But I think there's a bit of difference between each one of these ETF. And just to put it out there, I think our ETF is the only ETF that is investing in the China AShares, which I will explain a little bit more after this. So now let's talk more about the product that we already list in the Bursa on the 28th of July, which is called the VP Sharia China AShares 100 ETF. So it is an Islamic equity ETF. It was launched in 12th of July and then listed on the 28th of July. So basically, the fund objective is to replicate the benchmark, to fully replicate the benchmark, which is the Dow Jones Islamic Market China AShares 100 ETF. We have no dividend distribution policy, so any dividend is basically incidental. So on the secondary market, the stock code is basically 0838EA, and the minimum trading board lot size is about 100 units, similar like other stocks. In terms of the fees, we have a management fee of up to 0.6% per annum of the NAV of the fund. And at the same time, we have a trustee fee up to 0.06% per annum, and the index licensing fee up to 0.04% per annum. So our ETF is actually listed on the main market of Bursa Malaysia Securities Berhad. All right, so now to talk more about the product itself. So during the ideation of this product, we decided on a 3-pronged approach in our strategy. So by focusing on China, we want investors, we want to actually tap on the growth of China and benefit our investors. And at the same time, given that value partners have an expertise in both China, investing in China as well as in AShares in particular, we would like to leverage on value partners' expertise on that as well. At the same time, when we talk about AShares, it is still underrepresented in the global portfolio. So we do believe there is a first mover advantage for investors to take this opportunity. And I think last but not least is the thematic consideration, where we decided to have a Sharia overlay on our ETF. And why we decided to do that? So basically, the first thing is being listed on Bursa Malaysia, which is basically the one of the more developed Islamic finance hub. We want to provide access to all group of investors, be it Sharia-focused investors or even the conventional investors. But at the same time, based on our study, we actually found that the resulting composition after all the Sharia screening being done, the resulting composition of the index is actually focusing more on the new economic drivers, which I will touch a bit later. So now just to understand, just to talk a bit about China. So I think everyone knows that China is, the one of the big superpower in the world. But how big is China basically? So so on this, we take a look based on the GDP. China is the second largest economy in the world, just behind the US. And we can see that since 2010, the gap between the first and second, the United States and the China is actually narrowing. And now we are entering into a new decade where we believe that the gap will continue to narrow. And if China can sustain its momentum going forward, we think that China can overtake US by the earliest 2030. So from this, you can see that there's a lot of potential for China. And even just to add, last year when the world was hit with COVID, China is one of the countries that still managed to record positive GDP growth of 2.3%. And even for this year, the IMF, and World Bank, and even the consensus are looking somewhere between 8 to 8.5% for China's GDP growth. So what the next question will be, what will be the driving force for China's in the coming decade? So to understand this, we take a look at the key highlight of China's 14 5-year plan, which are focusing more on to achieve sustainable, balanced, and high quality growth. And at the same time, they want to increase the middle class population. So this will be achieved via rapid urbanization, focusing on the green economy, focusing more on the domestic circulation, tech localization, focusing more on the companies to move up the value chains, and even the continuous opening up of the market. So from this, you can see that we can clearly see that China, which rose from an agrarian society to become the industrial power in the early 2000s, are now talking about the future. And this future will then be driven by the new economy. At the same time, as I mentioned, one of the key focus is also to increase the middle class population. And this is pretty much has to do with consumption. Consumption made up about 54% of China's GDP, which is still lower than the level seen in developed economies, which range somewhere between 70 to 75%. And at the same time, with globalization taking a step back, and the world has shown some level of hostility towards China, the government has seen prioritizing domestic consumption as a way to reduce the dependency on the global markets, and at the same time to deliver sustainable growth. This is where the China's 500 million middle class population by 2025 plays an important part. And to provide some perspective, this is equivalent to roughly about 1.5 times the size of US population. So you can imagine the growth potential coming from this higher domestic consumption going forward. So when we talk about investing in China, there's a whole range of share class that we can discuss. Generally, investors, I assume, are more familiar with the AShares, which are traded on the Hong Kong Stock Exchange, or even the American Depository Receipt, the ADR, which are traded in the US. But these two are actually categorized as China offshore markets. So what is this? What is China AShares? So China AShares is basically the securities of which mainland China companies, which is incorporated in mainland China, and then listed on the mainland China either through the Shenzhen Stock Exchange or the Shanghai Stock Exchange, of which the trading currency being used is the renminbi. And again, why is China AShares is important for the market? Historically, China AShares were only available for purchase by mainland citizens due to China's restriction on the foreign investment. But I think over the years, we can, especially in the last 5 years, we can see that Chinese authorities have been highly active in liberalizing their markets. The initiative include starting the Stock Connect program in 2014, removing quota limits for qualified foreign institutional investors, and implementing new laws to enhance corporate disclosure requirements as well as investors' protection. At the same time, if we look on the chart on the bottom left there, we can see that compared to AShares, which has about 285 listed companies, and the ADR, which has about 158 listed companies, AShares have slightly more than 4,000 listed companies with a combined market cap of about 12.6 billion US dollars, at 12.6 trillion US dollars. This is compared to ADR 2.3 trillion and the AShares 900 billion. So you can see there's a whole range of bigger investment opportunity set for investors to pick and choose from. And at the same time, ever since the government started the Stock Connect program, we can see there's a continuous inflow into the market. And even when we saw some market around in the past few months, we can still see that actually the the foreign inflow is still coming in for the China AShares market. Okay, in terms of the long-term performance of China AShares against the major indices, we can see that the Shanghai Shenzhen CSI 300, which is the proxy to China AShares, actually outperform all the other major indices with an annualized return of 14.4%, with the closest peer being the S&P 500 index at 10.3%. At the same time, despite being the second largest stock market globally, AShares is still underrepresented in the global portfolio, with AShares actually represent less than 0.22% in global equity fund holdings. So despite commanding about 11% market share in the world stock market, the AShares being held by global equity fund is about 0.22%. So you can see there's a big mismatch between those two, and we believe that going forward, the mismatch will actually narrow, and I think it will definitely benefit the China onshore markets. At the same time, if we look at the metrics on the right, AShares actually exhibit low correlation against other major markets at between 0.4 to 0.5. And we know any assets with low correlation is generally a good addition to investors' portfolio. So this is why we truly believe that AShares as an asset class do provide a potentially compelling investment opportunity for investors due to the diversification benefit as well as room for first mover advantage. At the same time, one of the key catalysts that we believe has driven the interest into the AShares is basically the index inclusion, which was started in 2019. So basically 2019 is a monumental year for China AShares because index providers such as MSCI, FTSE Russell, and S&P Dow Jones actually increased the weight to China AShares, and this actually drive the continuous inflow into the AShares. At the same time, AShares market, which has been traditionally a retail market, has seen growing participation from institutions and foreigners, while current ownership levels indicate growth potential in the coming years. All right, so I think that's pretty much about China as well as the AShares. So now we'll talk a bit more about the benchmark that our ETF is tracking. So the benchmark is called Dow Jones Islamic Market China A100. So it is designed to measure the 100 of the largest China AShares companies that pass rule-based screen for adherence to Sharia investment guidelines, and is adjusted for the foreign ownership limits. In terms, so because this is a Sharia index, so it follows the Dow Jones Islamic Market methodology, of which it is a negative screening, which comprises of both qualitative and the quantitative part. So when we talk about negative screening, it is basically exclude any companies that have high exposure in the sectors like alcohol, tobacco, pork, conventional financial services, entertainment, weapons, and defense. And at the same time, for the quantitative screening, it also excludes companies with high debt, high cash, and high account receivable, with I think the threshold being is the 33%. In terms of the eligibility for the universe, the index membership will come from the broader Dow Jones Islamic Market China A index, and its constituent must be traded in Stock Connect. Special treatment stocks, which are stocks that have issues of going concern or faced with the risk of delisting, are excluded. This is to ensure that our index only comprises of fundamentally sound companies. And there's also a liquidity criteria of which it must be more than $1 million for the new candidates and more than $0.8 million for the current constituent. So things like the exchange special treatment and the liquidity criteria, and also adjusted for the foreign ownership limits, are among the key steps that we took when we discussed with the index providers to come up with this index. This is to ensure there's enough liquidity on the underlying, and it will not impede our work in trying to replicate the benchmark. So in terms of the weighting, the constituent are weighted by their float adjusted market cap, and the constituent are rebalanced every quarter. Multiple factors are taken into consideration to ensure the robustness of the underlying index. So during the ideation, or during during the development of this product, we actually take into consideration, we actually compare it with other China onshore Islamic indices. So from what we know, there's two other, which is one by MSCI and the other one by FTSE. So on the bottom there, you can see there's a slight difference in terms of the number of constituents as well as the methodology being used for the quantitative screening. We can see that for our Dow Jones Islamic Market China 800, the denominator being used for the quantitative screening is market cap, whereas for the other two, the denominator being used is the total assets. So if we look at the cumulative return, we can see that our DJIM China 800 actually outperformed the other two by quite a huge margin. So we found out that the total asset-based index, like the one by MSCI and FTSE, actually discriminates against tech and service sector, which normally operates on an asset-like business model. And this is one of the key reasons why it severely underperformed market cap-based index in the recent years. So now we take a closer look at our Sharia index versus the conventional sibling, which is the CSI 300. So we can see that DJIM China 800 is actually a good proxy to CSI 300 with correlation of 0.89 and beta very close to 1. And even if we look at the 1 year, 3 year, and 5 year performance, DJIM China 800 managed to outperform CSI 300 in all the 3 periods there. But despite being a good proxy, it also offers a unique differentiation proposition between our Sharia index and the CSI 300. One of the key difference is that our index actually is shown skewness towards quality and profitability, as shown by the higher ROE and higher ROA compared to the CSI 300. And I think we can further discuss this if we look at the top 10 companies as well as the sector composition between our index and the CSI 300. So due to the function of Sharia screening, DJIM China 800 virtually have no exposure in the financials and real estate sectors. So we know that both financial and real estate, along with the high leverage SOEs, were the main drivers of China's old economy that we've seen in the early 2000s. So with the absence of financial and less focus on SOEs and real estate, DJIM China 800 are skewed towards what we call the new economic drivers, with high exposure in sectors like IT, healthcare, and consumption, which echo what we have been talking about, what China plans to do in the coming decade. So I think this is just to showcase to you some of the fact sheets of the company that we have in the top 10. So what we found out is that each of these company is basically the market leader in the segment that they are operating in. So take CATL, for example. They are basically the largest EV battery manufacturer, both in China as well as globally. At the same time, it also exhibits, like what I mentioned on the index, the skewness towards profitability and quality, whereas where it shown a higher ROE compared to its comparable peers. And at the same time, due to the quantitative Sharia screening, these companies actually have a stronger balance sheet compared to its peers. And these traits can actually be observed across all the other 9 companies as well. And I think take for, I mean, this another company, for example, China Yangtze Power. So despite it being categorized as a utility company, which I think most of us would agree that utility is basically one of the old economy sector. But if we look deeper, China Yangtze Power is basically the largest hydropower company in the world in terms of the installed capacity. So despite it being categorized as a utility company, it is skewed towards the new economy or things like I mentioned earlier on the focus towards the green economy. So this is why I said earlier, I think our index actually focusing more on the new economic drivers. All right. So now it's more on the ETF application. So I do understand that probably some investors are not familiar with ETF and how you can use ETF or implement ETF into your portfolio. So there's a various approach to add ETF into your portfolio. So one of them is basically diversification through a single ETF. So by buying let's say by buying an ETF, for example, our ETF, you can actually get an exposure to 100 companies, and these 100 companies have a different shows a wide range of sector composition. So if we look there, we can see that the healthcare is about 26%, IT 23%, and industrial 19.6%. So from this, you already get a diversification benefit through just a single trade. Or one of the other way is for you to build a global ETF portfolios just by using ETF. So what you're doing is basically combine the low cost and different market exposure to create a global portfolio. So at the same time, by doing this, you are able to incorporate your own view through the tactical adjustment on the asset allocation. So let's say if you think that ETF, Malaysia is already at the bottom and it is going to rebound anytime, sometime soon, then you can actually increase your weightage into Malaysia ETF by reducing your weightage in other ETF. Likewise, if you believe that China is going to to dominate the world, in less than 10 years, then you should actually increase your weight on China. That's for example. At the same time, I think last but not least is basically you combine the ETF with domestic single stock portfolio. So I would think that a lot of investors exposure are towards the domestic shares as well as domestic sectors. So we know that the domestic market hasn't been has had its challenge, especially in the last 2 years. We are facing with the political uncertainty. We are facing with the health risk, health crisis, as well as the economic crisis. So by having a foreign underlying ETF, you are able to diversify away the single country exposure and home market risk. And so you are then able to generate alpha or reduce risk through this portfolio combination. And like I mentioned earlier, it also provide you the operational ease through the ringgit denominated foreign underlying asset. So an ETF can be accessed through the primary or secondary market. So because ETF is an open-ended, like I said, the units outstanding can be created or redeemed depending on the demand by investors. But I think normally people are focusing more on the secondary market or the exchange, where you can actually easily get the access to the ETF. At the same time, in terms of accessing the ETF, you can either go through a direct approach where you can instruct your broker or execute your trades via the online trading platform such as the FSMOne. At the same time, you can also opt for a robo-advisory platform to which actually use ETF as a way for them to allocate investors' money. Yep, I think that's all from me. Handing it over back to you, Faris.
Okay, thank you so much, Kamal, for your presentation. Okay, so we have quite a number of interested investors here. Perhaps we can take the questions one by one. Okay, so Jason here has asked, is there no dividend, mainly capital appreciation for this ETF?
All right. Yeah, like I mentioned, we have no dividend distribution policy for this ETF. So one of the reason is because the company, like I said, it is focusing more on the new economic drivers. So the companies are more are skewed towards a growth companies, which doesn't give a lot of dividend in the first place. And at the same time, we will reinvest the dividend into the ETF. So to reduce the tracking error of the ETF.
Okay. So the next one would be, is there any ESG related stocks in this ETF? And what's your take on ESG, the ESG landscape lah?
Yeah, okay. So I think just to clarify again, our ETF is not ESG ETF, but it's a Sharia ETF. But I do believe there's always an overlap between the ESG and the Sharia. And like I mentioned, one of the company, which is the China Yangtze Power, which are focusing more on renewable energy. So I think that's already one of the probably ESG focus focus company that investors can have in their portfolio. And I do believe that ESG is going to gain traction over the years. But I think that there's a lot of things that need to catch up, especially for companies, both in Malaysia as well as globally.
Is there any plans to include an ESG ETF from Value Partners?
If there's a demand for it, we can consider it. Yeah.
I see. Okay. All right. So the next one would be your views on China, because recently, especially last month, there has been a crackdown by the Chinese government on especially tech kind of stocks lah. Okay. So what's your view on this entire frenzy that's happening?
Right. I think of course, I think in terms of, in the short term, I think the regulatory uncertainty is going to linger around the market. But I think we still are bullish on the on China market in the long run. And at the same time, I think we have to read the statement by the political bureau. Last month, which already toned down the tone on the regulatory reform as compared to their tone in last December. So I think this is one of the way for them to actually calm the markets. And at the same time, the focus on the crackdown is not really just to punish these companies, but it is more towards a reform to reduce the economic inequality as well as to maintain the social harmony. So I think that is the key point that I think people need to understand on this crackdown. Yeah.
So it's basically to make them practice the good stuff lah, and not go too haywire on their regulations.
Yeah. If I can add, I think some of the sectors that the companies are being targeted is the sectors that has been very minimal regulation before this, and I do believe the regulatory catch up is underway, and at the same time I think sorry, I lost my train of thoughts there. Just to add the talk about the reducing the economic inequality. So let's say like the education sectors that is being targeted, which is more towards the after school tutoring session. So what the Chinese government want to do is basically they want to reduce because normally the after school tutoring is can be afforded by the high net worth people, and this will left those people that cannot afford it cannot get it lah. So they don't really want this wide gap between those who have and those who have not. So that is why they are cracking down on this sector in particular. So I think that is one of the example there.
All right. Okay. So next one will be on, are there any plans from Value Partners to include a Sharia compliant H share ETF in the future?
I think again, it all depends. I think when it comes to introduce an ETF, it always a chicken and egg situation. So for us, we need to see a demand for it before we can actually decide to actually build a product on it. So I think as long as we can see a substantial demand on it, I think we can actually seriously looking into it.
Okay. So, yep. Thank you so much for your answer. So there you have it. The audiences they are watching. If you want more, maybe you can shout to more to value partners. And then we can who knows, we can see this product soon coming out on the market.
Yes.
Okay. The next one will be okay. So this audience is a bit worried on the liquidity part. So I'll just read her question here. So ETFs in Malaysia is not that popular compared to US market ETFs. If invested for long terms into this ETF, I'm afraid of liquidity issues, meaning that it'll be difficult to sell later as there's probably no buyers. What's your assurance on this issue?
All right. Okay. Um, Okay, so when we talk about ETF liquidity, we have to understand that the on-screen liquidity or the volume that you see on the screen is basically a fraction of the total liquidity for an ETF. There's also the hidden liquidity or basically the inventory of the market makers that the investors can tap on. And at the same time, there's always the underlying liquidity of which investors can go into the primary market to do ETF creation or ETF redemption. So there's always enough liquidity on the product itself, actually. Um, yeah, I think it shouldn't be a concern lah. I mean, I know that ETF in Malaysia is still relatively new, and globally ETF is just 28 years actually. So and then in Malaysia is still relatively new, and I think as long as investors, both the retail and institutional, can actually understand and further use ETF, I think the liquidity shouldn't be a concern anymore.
Okay, thank you for your answer. Okay, the next one would be, given the recent crackdown and value partners being a China market expert, when do value partners expect the China market to return back to normalcy?
Yeah, I think this one like I said, I think on the short term, we do believe that the concern on the regulatory crackdown is going to persist in the market. But I think at the same time, people are actually focusing more on what the tone is going to be given by the PBOC, by the Politburo, by the government. And I think this is the key thing that people will watch. But again, long term, we are still bullish on China.
Okay. So yeah, the next questions are probably asking about any projected growth rate for this new ETF. I'm not sure if you can answer this question, but if you want to take an attempt, yeah, sure, go ahead.
Yeah, I think it's very difficult to actually forecast the return of the ETF. Is basically try to forecast the return of an index or the market lah. I mean, there's a lot of things coming under play, and things like the regulatory crackdown that we mentioned is probably one of the things that people don't really take into account earlier this year, but it's happening. So there's a lot of factors in determining the performance of the market lah. So I think it's very difficult. I don't think I can answer that for you.
Yeah. I mean, I don't. Yeah, I don't expect you to answer that as well, because obviously we don't have a crystal ball to know
exactly.
when is the market going up or going down.
Yeah.
So yeah. So anyway, FSMOne is also an iFAST group in total is also very bullish on the China economy in the coming years. Okay, so perhaps you want to go through on our website and take a read on our articles and see what are the good reasons that we have to be bullish on China, and then maybe you can make a decision from there. Okay. Okay, so the next one will be, okay, so this client, they are asking whether this ETF, since it's Sharia compliant, will it be missing out on opportunities since it's a Sharia compliant a product is not supposed to invest in alcohol or gambling or financial services type of industries. Would it be missing out on opportunities, or do you think that there is still opportunities that is in this ETF, regardless of it being a Sharia compliant?
Yeah, I think when it comes to that, there's always a trade-off between the Sharia and the conventional, product. So again, I agree. By not having a financial, you are basically missing out on the financial part. But at the same time, I already talked about China's focus in the coming decade, which are skewed towards the new economic driver, and we already talked about how IT, how consumption, and how healthcare is going to drive the market in the coming years. And this is as opposed to the old economy, which was driven mainly by real estate, by financials, and by the high leverage SOEs. And I think even now, I think just to add in terms of the regulatory crackdown, I think the government tone is still very hawkish on the property sectors. So by not having big weightage on the real estate, I think it actually benefit our ETF as well. Yeah.
Okay. So there you have it. So what is your take on China A shares versus China H shares? And do you think that the A shares are more quality investments as compared to the H, or do you think that they each have their own merits? What's your take on it?
Yeah, I think we don't really compare. I mean, these two, we do believe there's always a pocket of opportunities, especially in these two markets. But I think with the recent regulatory crackdown, I think the China offshore markets has been mostly affected by it as well. So yeah, I think in the near term, I think people will, especially the foreign investors, will be more wary about the A shares and even the ADR.
Okay, Ken. So yeah, I think we are coming to an end. We don't really have much questions anymore. If you have any more questions, please leave it in our Q&A section, so we can get onto it as soon as we can. So maybe one more question. What is your take on renminbi versus MYR, and will it affect the fund performance in the future?
Yeah, I think generally because China is basically, Malaysia's key trading partners. Normally, from what I see historically, the renminbi and the ringgit actually goes in tandem. But of course, any appreciation or depreciation of the RMB versus ringgit will have an impact, because although the ETF is traded in ringgit, but the underlying shares are basically in renminbi. So definitely, any fluctuation in the currency have an impact on the performance.
Okay, yeah. All right. Yep, I think that's about it for today. Okay, we have more questions, but this one, I think, like Jade, your question is approximately how many stocks will there be in ETF? I think this one you can take a look at our fund fact sheet page on FSMOne. Okay, you'll be able to see how many shares do value partners have in this ETF. Okay. Yeah, cost and all these things, the information will also be on the website. Okay, you can head over to our website. Maybe I will share with you guys a link before I close the show for tonight. Okay. So this link, you guys can go into this link and have a look at this ETF. Okay, if you feel like you want to make an investment into it. Okay, so yeah, thank you very much, Kamal, for your time, and thank you all of you for attending and for your interesting questions. Okay. We look forward to hosting another webinar session for you again, and we will also be talking about ETFs 2 weeks from now. Okay, so do stay tuned to us, and do stay safe during this pandemic time. Take care and good night. Thank you, Kamal, and thank you, Value Partners team. Okay, bye.
Thank you. Bye.
Bye.